Hello, it's Robert Miner with Dynamic Traders Group with our weekly DT trade strategies for the week beginning June 1st, 2020, the week next week. And as usual, we give you a brief outline of 2 or 3 markets that look like they're going to be in good trade setups next week. It's an abbreviated form of what we do for our DT Report subscribers. And if you like what you hear here and what you learn, check out our DT Reports where you can get a 1-month trial for just $19 at dynamictraders.com. You'll get updated daily. You'll get weekly video tutorials. We now do every other week. We do a live webinar for our DT Report subscribers exclusively, and just there you get a whole lot of content. And so it's a good time to check it out when we have this $19 trial available. Okay, let's get started with a couple markets I know you're going to be interested in. Let's take a look at the precious metal market, meaning silver, gold, and the GDX. I usually take a look at gold because that's personally the market that I trade the most often. But silver's in this ideal technical position, so let's take a look at it. It's going to set up the stage for gold and the GDX as well. Here's silver daily data from that February high. We had this significant decline into the March low, and then we've been working our way higher since the March low, and we are now probably within 2 or 3 trading days of completing what we call at least a weekly high. That's a high that's going to last several weeks. And look at this for those of you who are interested in Elliott Wave. This is almost a textbook 5-wave advance into the April 14th high, little ABC correction. And then right now, as of Friday, we should be at least in wave 5. And we reached the typical end of wave 5 target zone on Friday. That's 127, 162% external retracement of the wave 4. When this is complete, we should have at least a minimum corrective decline lasting 2 to 3 weeks. That would be a minimum. And what we'll look at in the days and weeks ahead, if we get a daily close below 1634, or the equivalent if we have a different contract in a couple weeks, 2 or 3 weeks from now, is that would indicate this is a completed correction, and we get a close below that, more than likely we would continue to new lows. So in the immediate term, it's fairly bearish. Could be very bearish in the longer term, but we don't forecast anything. We identify conditions with a high probability outcome. So here's the 2 key time factors. There's others, but these are the key ones. Monday and Wednesday, it's the 100% alternate time projection of what I got labeled a wave A from the wave B low, and then it's just the simple high to high to high. That's on Wednesday. So we should be real close to a weekly high. Let me show you the weekly data. And the weekly momentums, this past week was week 3 of dual look back overbought. Usually we have a price reversal within week 4. These are those 2 key time factors, but done on the weekly data instead of the daily data. So they both show that next week is a high probability for a weekly high. Then again, we'll go back to the daily. We're in the end of wave 5 target zone. The next daily momentum in the DT oscillator, bear reversal, should coincide with the weekly high. It'll be a dual time frame momentum bearish setup to complete this end of wave 5 high and to reverse down for at least 3 to 4 weeks, at least into the latter part of June. That would be a minimum expectation. So this is a real important market to take a look at. And I know a lot of people, particularly if some of the other markets get volatile, if we tend to have like a bearish market in the S&P, they think there's a flight to safety and to silver and particularly gold. And that is an absolute myth. It's not correct. The only people that say that are the ones that don't have the data to look at. I did a special big picture report for our subscribers a couple of weeks ago on gold, silver, the GDX. So our subscribers know that that's a myth because they've seen the data. Here we are with gold. Gold is not quite as clean a setup as silver is. So silver is the biggest warning, and they all trend together. So if silver makes a reversal, so is gold going to. So what we're looking at for gold is the next daily momentum, bear reversal. Then gold should then continue sideways to down, probably to a new low, for a minimum of 2 to 3 weeks. So again, they're all going to reverse about the same time. And of course, a big one here, another one that's really clear, is the GDX. It made, actually on the reversal week 2 weeks ago, it made a dual time frame, dual look back weekly momentum bear reversal. So we should have at least another 2 to 3 weeks of net sideways to down in the GDX and in mining stocks. Maybe a whole lot more, but that would be a minimum. Then we'll reassess the situation when it looks like we're near a weekly low and see how important that low may be. So this is a real important setup coming this week, and it's foreshadowed by the position and just the clean technical position from time, price, pattern, and momentum in silver to complete at least a weekly high, and ideally be complete by this coming Wednesday. That's within the next 3 trading days. Let's take a quick look at the ES. This is the weekly data for the ES. And ever since around this first week in May, I've been looking for a probable weekly high. That's a high that lasts for several weeks, has a correction probably to about 50% or so. And of course, that hasn't unfolded. We just, from this high, and it was a reversal week, we just went sideways for about 2 weeks. And then, of course, the last couple of weeks, we continued to advance to a new high. I've still been making a fair amount of money on these trades just because the ranges are so much these days that even if we only get 2 or 3 or 4 days sideways to down, and then we use good trade strategies, we can lock in at least a partial open profit on that. So if we get stopped out, we still make some money. And that's part of what we do with our reports and with our trade tutorials and our video updates for our subscribers is we teach trade strategies. We don't forecast markets, we trade markets. So trade strategies are really, really important because the technical position may typically the outcome may be, for instance, back in early May, the typical outcome may be for a top that lasts several weeks and we have a more significant decline than we had, but that doesn't necessarily always unfold that way. So if we have good trade strategies, we can at least take a modest profit out of the market and then be ready for the next time. And guess when the next time is? Well, it's this coming week. And that more than likely we're going to finish this 5th wave up. As of last week, we reached right into the high probability target zone to complete wave 5, and that's just below the 78.6% retracement. And this past week was week number 4, where the weekly momentums have been dual look back overbought or bearish. So usually we get a price reversal by the 4th bar, certainly by the 5th bar. In most cases anyway. So we're on edge on the extreme to complete this weekly high. How does that fit in the long term? Well, that's something for subscribers that I go into detail. Let's just say I wouldn't be getting too excited on the bull side, for the long term at least. So here we are with the daily data. Daily, probably 1, 2, 3, 4, 5. Beautiful for those of you familiar with Elliott Wave. And our daily momentums are dual look back overbought, and they have been for a couple of days. That means we should be within a couple bars of completing a daily high, and that daily high should coincide with the weekly high. Let's take a look down to a smaller time frame. The 240-minute data coming off this probable wave 4 low on May 14th, probable 1, 2, 3, and probably wave 4 low on Friday. That would indicate we'll probably make at least a modest new high into Monday or Tuesday, could just be Monday, to complete not just this advance as a 5-wave advance from the May 14th low. That would complete the higher time frame advance going back to the March low, followed by a correction of at least 3 to 4 weeks, and fairly significant, probably get down below this May low. So we go into details on that with our subscribers, but this is enough to at least warn you to be aware of we probably very, very close within a day or two of making a weekly top. So certainly a trade below Friday's low would indicate that the top is made. That's called a pattern reversal signal. And so when we're down here in basically 3 time frames. We've looked at weekly, daily, and intraday 240-minute data. Whenever the intraday trend is over, that indicates the daily and the weekly trend is also reversing. So get ready for that next week. Probably no later than Tuesday we'll complete the top. So that's it for today. I hope if you liked what you learned here, you'll check out our DT reports at dynamictraders.com. We got a 1-month trial that you can keep up to date every day. It's just $19. Check it out. Take care.